Forex, crypto and stock courses content. We already have started the chapter 1, which is about the money. And in this chapter, we have taught from invention of money up to money in modern economy. If you have missed those lessons, go to our channel and watch from class 1 to class 6. Prior to start any trading, you should know about the money first. Our today's lesson is Forex basic concept, which is in the second chapter under the FX or Forex fundamentals. Chapter 2, foreign exchange or Forex. So in this chapter, we already have studied 2 parts, and in the part 1, we have studied the following lessons. Lesson 1, what is Forex and Forex history. Lesson 2, Forex characteristics. Lesson 3, how much Forex traders can make. Lesson 4, Forex working hours. And in the part 2, we have studied the following lessons. Lesson 5, online trading and brokerage important terms. Lesson 6, how brokerage and online trading works. Lesson 7, how to choose the right broker. Lesson 8, what's the pip and how to calculate pips in Forex. So if you have missed these lessons, please don't forget to watch them, and I have mentioned their links in the description below. They are very important lessons, especially if you are a beginner, so understanding of the fundamentals of Forex is very necessary for you. Part 3, Lesson 9, the basic concept of Forex, price, ask, bid, and spread. So our today lesson is the lesson 9. So let's start our today lesson. Chapter 2, Lesson 9, content. So today we'll teach you the following. What is the price? Second, what are the ask and bid prices? 3, what's the spread and how to calculate the spread value. Let's start from the part 1. What is the price? The price is the monetary value assigned to a good or service, or the price is the amount of money paid for something or the value that something is exchanged for. The price in Forex refers to the exchange rate of currency pair. The exchange rate is the price at which one currency can be exchanged for another currency. The exchange rate is determined by the supply and demand of 2 currencies involved. If you look at the exchange price of any currency at Google, you will see only the value of the required currency compared to another. There is not any sell or buy prices separately. Or the government banks distribute the money in the market, where they also give the value price of any currency compared to your money, such as the actual price of value of any currency compared to another. But while we are talking about the money exchange through exchange shops, brokerage, commercial banks, hotels, or supermarkets, here the situation is different. They sell currency higher than the actual price, and they buy lower than the actual price, which is called ask and bid prices. What are bid and asks? Ask and bid in Forex refer to the prices that the market makers offer for currency pair. Ask. The ask is the price at which a trader can buy a currency pair. So please look here at the chart. Here the red color shows the ask. Bid. The bid is the price at which a trader can sell a currency pair. So here the blue color is bid. So if you trade in the trading platform, so always when they are selling a currency for you, it is the higher than the actual price. Or if you sell any currency pair, it is always lower than the actual price. What's a spread in Forex? A spread in Forex difference between the bid price and the ask price of a currency pair. The spread is usually expressed in pips, which is the smallest unit of price movement in the Forex market. Please here look at the chart. Here is the ask and here is the bid. So the difference between ask and bid is the spread. The spread is the commission or cost of trading in Forex market and is included in total cost of trade. In Forex platform, mostly the spread amount shows as per point. For instance, as you see here in the market price. So for instance, here in the Euro USD, the 10 is the spread, and the spread is the difference between the ask and bid prices. Or here in the ground pound USD, the spread amount is 16, which shows the difference between the ask and bid prices. In the Forex platform, mostly the spread amounts shows as per point, and also you have remembered that 1 pip is equal to 10 points. So here in Euro USD spread is 10 points. Or here in the ground pound USD, the spread is 16 points, which is equal to 1.6 pips. Or here in the USD GPY, the spread is 15 points, which is 1.5 pips. So before you open an account with any broker, make sure how much spread and what type of spread they will charge you. I already have provided a lesson in this regard on how to choose the right or trusted broker, and I have mentioned its link in the description below as well. It's the very important lesson. I do recommend you to watch it before opening any account with any brokers. The spread can vary depending on the currency pair being traded and the liquidity of the market. A lower spread means that the cost of trading is lower, making it more profitable for traders. How to calculate the spread value? For calculating the spread amount, we'll use the following formula, which is the pips value calculation formula as well. If you haven't watched our previous lesson, which is about the lots, pips, and percentage, I do encourage you must watch it. You will learn in detail how this formula developed and how pips and lot calculate. I have mentioned its link in the description below, and I have provided a very complete and detailed lesson in this regard. So for better understanding of the spread value calculation, let me give you an example. Example 1. If you trade USD CHF in 0.5 lot, how much you will pay for the spread commission? Answer. So we already know 1 pip is equal to the 10 points. So here in this example, the CHF spread amount is 15 points. So if we are going to change the 15 points to the pip, so we'll divide it by 10 and will give us 1.5 pips. And then we'll use this formula. Spread value is equal to the pips amount divided by current exchange rate times lot amount times 10, which is from formula. So the spread value will be 6.93 US dollar. It means while you trade 0.5 lot USD CHF and the spread is 15 point or 1.5 pips, we have to pay 6.93 US dollar. And if we trade 1 lot, it could be 13.86 US dollar. Example 2. If you trade ground pound USD in 0.5 lot, how much you will pay for the spread commission? Answer. We already know 1 pip is equal to the 10 points. So here in this example, the spread amount of ground pound USD is 16 points. So if we change that to the pip, so we'll divide it by 10 and it will be 1.6 pips. So for spread value calculation, we'll use this formula. Spread value is equal to the pips amount, which is 1.6 pips, divided by current exchange, which the ground pound USD current exchange is 1.2290, times lot, which is 0.5 lot, times 10, which is from the formula. So the spread value will be 6.51. So here the spread value unit is GBP because the ground pound is the base currency in the GBP USD. In the previous example, in the USD CHF, we used the spread value unit as a US dollars because the USD was the base currency in the USD CHF. So here in this example, GBP is the base currency in the GBP USD. So if you don't know about the base or code currency, so no worries. I already have this lessons in the chapter 1 and I have mentioned its link in the description below. Currency code and currency pair in the Forex, and watch that lesson. And that's also very important lesson, especially if you are a beginner. And you will learn what's the currency pairs means, what's the currency code, and what are the base and code currency. So spread value in US dollar will be the spread value amount times current exchange rate, and it will become 8 US dollar. In the both example, we have used the same volume, but the spread commissions was different. In first example, for 0.5 lot USD CHF, we have to pay 6.93 US dollar as commissions, while the spread was 15 points or 1.5 pips. And for 0.5 lot GBP USD, we have to pay 8 US dollar as commissions, while the spread is 16 points, 1.6 pips. Even the spread was almost the same, but we had to pay bigger amount in ground pound USD because the base currency and currency pair price are different in these currency pairs. So that's why we have to pay different spread amount. If you still had a problem on understanding the pips calculations, you have to watch our previous lesson, please. What are types of spread? 1. Fixed spread. A fixed spread is difference between the bid and ask price of a security where the spread remains constant regardless of market conditions. 2. Variable spread. A variable spread is pricing model in which the spread on a security can vary depending on market conditions. It changes depending on market volatility and liquidity. Brokers mostly keep increasing the spread amount while the market is mostly volatile or high volume. 3. Commission-based spread. A commission-based spread is typically used in future and option trading and is based on the amount of commissions charged by the broker. The broker charges with a spread of the total transaction value. 4. liquidity spread. A liquidity spread is based on the amount of liquidity in the market. Spread increases when the market is more liquid and decreases when the market is less liquid. What is the Forex brokerage commission? The Forex brokerage commission fees charged by broker to execute a trade on behalf of a trader. This fee is usually fixed percentage of the trade amount and can vary based on the type of account, the type of trade, and the broker. The commission is typically charged in addition to any spreads or other fees associated with the trade. The commission is an important factor for traders to consider when choosing a broker and opening an account. Brokers typically charge different commissions for different accounts, so it's important to compare different brokers to find the best deal. In addition, brokers may also offer different commission structure, such as flat fee or tiered structure. It's important to understand the commission structures of particular broker before opening an account. I already have taught how to choose the right broker, so I have mentioned its link in the description below. It's a very important lesson, so prior opening any account, watch that lesson. Thanks for staying with me until the end of this lesson. So please don't forget, subscribe to our channel. And if this lesson was helpful for you, please don't forget the like and comment as well. If you have any questions, please leave in the comments and I will reply it in the next lesson.